Hello everyone, Van Richards here. In our previous videos, we've looked at the basics and the performance of the American Century Ultra Fund. Today, we're going to discuss something that is often overlooked, but it is really crucial to your long-term returns. That is the fund's cost, specifically its expense ratio. But before we begin, it's important to know that this information is educational only. Please stay tuned for important disclosure information at the conclusion of this episode. So first off, let's start by defining what an expense ratio is. Simply put, it's your percentage of the investment that goes towards running the fund each year. This includes management fees, administrative costs, and any other operating expenses. It's important because these costs directly affect your returns. Every dollar paid in expenses is a dollar less that's in your pocket. Now, let's look at the American Century Ultra's current expense ratio. As of the latest first quarter data in 2024, it stands at 0.91%. What does that mean in practical terms? Well, for every $1,000 you have invested in the fund, you're paying $9.10 a year in fees. But here's where it gets interesting. The expense ratio of the American Century Ultra hasn't always been 0.91%. Let's take a trip down memory lane and look at how it's actually changed over the past decade. See, back in 2014, the expense ratio stood at 1.01%. From 2015 to 2017, it held steady at 0.98%. Then from 2018 to 2020, it dropped a little bit more to 0.97%. Then from 2021 to 2023, it decreased even further to 0.95%. And now in 2024, we're at 0.91%. So you can see that there's been a gradual but a consistent decrease in the expense ratio over time. Now, this is generally a positive trend for you, the investor, because what it's doing is it's lowering the cost, which means more of the fund's returns are ending up in your pocket. Now, you might be wondering, how does this 0.91% compare to similar funds? Well, it's lower than the category average of large growth funds, which really ranged between 0.99% and 1.02% in recent years. So in that respect, American Century Ultra is more cost effective than many of its peers. Now, while the American Century Ultra's expense ratio is below the category average, it is worth noting that there are even less expensive options available in the market. You see, some index funds and ETFs that track similar growth indices might offer even lower expenses. The comparison group of large cap no load funds, for instance, has maintained an average expense ratio of around 0.8%. Why does that matter? Over time, even small differences in expense ratios can have a significant impact on your investment returns. For example, if you invested $10,000 and you earned 7% annual return before expenses, after 30 years with a 1% expense ratio, you'd end up with $57,400. With a 0.91% expense ratio, you'd have about $59,100. That's a difference of $1,700 just from a 0.09% difference in expenses. Remember, while costs are important, they shouldn't be the only factor to consider when you're choosing a fund. You also need to look at the performance, the risk, and how it actually fits into your overall investment strategy. Now, in our next video, we'll examine American Century Ultra's portfolio composition and its top holdings. This will give you a better understanding of exactly what you're investing in when you buy into this fund. Now, if you want to get an even better understanding of how fees affect your retirement plans, take a closer look at my online course, Plan, Pick, and Profit, which you can find at planpickprofit.com. And lastly, make sure to read the investment prospectus before investing any money. Thank you for watching, and I'll talk to you. Important disclosure information. This publication or presentation is for educational and informational purposes only and should not be considered investment advice. Opinions expressed are as of the date of the publication or presentation. Such views are subject to change. Richards Financial Planning does not guarantee the accuracy or completeness of the data presented herein. Van Richards is a managing member of Richards Financial Planning, LLC. Richards Financial Planning, LLC is registered with the Texas State Board of Securities and governed by that entity and the U.S. Securities and Exchange Commission. Richards Financial Planning, LLC shall not be responsible for trading decisions, damages, or other losses resulting from or related to the information, data analysis, opinions, or their use. The securities quotes, charts, articles, or other statements regarding the market or additional financial information are obtained from our supplier's sources, and we believe it to be reliable. However, we do not warrant or guarantee the timeliness or accuracy of this information. Our company, our employees, our information providers, guests, or affiliates are not responsible for damages or liable for any errors or inaccuracies related to this publication or presentation. Past performance is not a guarantee of future results. All investments are subject to investment risk, including possible loss of principal. Individuals or other operational entities should consider if an investment or strategy is suitable for them by referencing their financial position, investment objectives, and risk profile before making any investment decision. The views and opinions of guests that may appear or be sourced with this publication or presentation are not necessarily those of Richards Financial Planning, LLC, and affiliates. Richards Financial Planning, LLC, and affiliates are not associated with the guest and their affiliates unless otherwise stated. Throughout our presentations, we may mention related educational products or services, such as online courses or additional resources. These mentions are intended to provide viewers with optional, in-depth learning opportunities related to the topics discussed. The availability of these products does not affect the objectivity of the information presented, and viewers are under no obligation to purchase any mentioned products or services.